Quick question for you. If you could sell your house and keep every penny of your profit, no federal taxes at all, would you do it? Well, Congress is looking at a new law that could make that a reality. It's called the No Tax on Home Sales Act. And depending on who you ask, it's either a brilliant way to fix the housing market or a budget-busting giveaway that's never going to happen. Let's talk about what's really in this bill, why it matters to homeowners and investors, and whether it stands any chance of becoming law. So let's start with how things work right now. If you're single, you can exclude up to $250,000 of equity gain from the sale of your primary home. If you're married and filing jointly, you can exclude up to $500,000. Anything above those limits, that's taxed as a capital gain. The exact rate depends on whether you own your home for 1 year or more and on your income tax bracket. Current federal capital gains tax rates are either 0%, 15%, or 20%. What's interesting, though, is that the $250,000 and the $500,000 exemption limits were set all the way back in 1997 and have never been adjusted for inflation. So while home values have exploded in many parts of the country, those tax exemptions stayed the same. And that's leaving a lot of homeowners stuck in what economists are calling the stay put penalty. Picture this. You bought your house for $200,000 20 years ago. Today, it's worth $800,000. That's a $600,000 gain. If you're married, you can shelter $500,000 of that gain. But the extra $100,000, you're probably writing a check to the IRS for $15,000 or $20,000 in taxes. And many homeowners don't even see it coming until they start planning to sell. This is the ripple effect that the National Association of Realtors talks about. People, especially seniors, are staying in homes that no longer fit their needs because selling could trigger a huge tax bill. They're not downsizing, moving closer to family, or freeing up homes for first-time buyers. And that's part of why inventory is so tight and prices keep going up. Just take a look at these numbers from NAR. 34% of homeowners, roughly 29 million people, already have enough equity to exceed the capital gains exemption if they sell today. By 2030, over 56% of homeowners could be over the limit. By 2035, it could be nearly 70%. In expensive states like California, Massachusetts, and Colorado, it's even worse. By 2035, 20 states are projected to have over 40% of homeowners possibly facing tax penalties just for having built equity in their homes. This is the backdrop for the new bill that was just introduced by Congresswoman Marjorie Taylor Greene. I know, that Marjorie Taylor Greene. Maybe you don't like her that much. Maybe you think she's a little crazy. But set that aside for a second and let's consider this proposal. The bill is called the No Tax on Home Sales Act. Here's what it would do. Number one, completely eliminate the federal capital gains tax on the sale of a primary residence. Number two, encourage homeowners to sell, which could help increase housing inventory and bring prices down. Number three, help seniors unlock the equity in their homes without worrying about a massive IRS penalty. And number four, support first-time buyers by freeing up more homes in tight markets. But there's a key detail about this bill you should also know. Greene's bill expressly excludes house flippers and investors. So it's meant purely for people selling their primary residence, not rental property owners looking to realize their equity gains. But hold that thought for a moment. We'll circle back to it. Personally, I think the proposal in this bill is a good idea. Why should regular homeowners who've been paying property taxes for years be hit with a giant tax bill just because their neighborhood appreciated? It's their equity. They earned it. On what basis should the federal government have the right to come in and steal 15% to 20% of a homeowner's equity growth? Not to mention, right now, we desperately need more homes on the market. If removing this tax helps and incentivizes people to sell and creates more opportunities for buyers, I'm all for it. With all that said, let's be real. This bill is just a proposal. Congresswoman Greene is a controversial figure in politics, and that alone can make it tough to gain traction. Also, Congress recently passed the Big Beautiful Bill, a major budget reconciliation law that includes both tax and spending provisions, forming the core of President Trump's second-term agenda. That bill was a real slog for them to get an agreement on, so I would say there's a lot of uncertainty about how much appetite the Republican Congress has left for more new tax breaks that would reduce federal revenue even further right now. And of course, the mainstream media and many critics on the left say that eliminating this tax entirely could disproportionately benefit higher income homeowners who have accumulated huge gains. So we'll see. Maybe this bill goes further, or maybe it dies right on the vine. You probably can't count your tax savings just yet. Even though Green's bill and the current exemption scheme exclude rental property investors, there's still a backdoor way to potentially take advantage of it if you're smart about it. If you own a rental property and it has significantly gone up in value, and you're ready to sell in the near future, you could move into it and make it your primary residence for a while and then sell. Why do this? Well, because under the current law and under Green's proposal, as long as you live in the property for at least 2 of the last 5 years before selling, you get the benefit of the capital gains exemptions and Ms. Green's new proposal if it ever passes. Here's how it works. Let's say you bought a 4-unit rental property for $200,000. You used a non-owner occupant loan to finance it and you never lived in it. 15 years later, let's say this property is worth $500,000. That's a $300,000 gain. Not to mention that if you are claiming depreciation against it every year for the first 15 years, all that depreciation would further increase your taxable gain. If you were to sell, normally you would either have to just pay the tax or do a 1031 exchange and buy another property with the proceeds. By the way, if you're interested in learning more about 1031 exchanges, I recently posted a dedicated video on that topic. The link will be in the description below and at the end of this video. So how does moving into your rental property before selling give you another option? Well, it satisfies that occupancy requirement. The 2 years doesn't have to be consecutive, and it doesn't have to be the most recent 2 years. If your tax filing status is single, you could move into it for 2 years, then sell and exclude $250,000 of that gain from taxes. If you're married filing jointly, you could exclude the entire $300,000 gain plus all of the depreciation. If you're in the 20% tax bracket, you could be looking at tax savings of $60,000 or more. So even if Green's bill never passes, doing this could be a huge tax-saving move for investors who plan ahead. So here's the bottom line. The No Tax on Home Sales Act could help millions of homeowners keep more of their hard-earned equity. And it might free up homes and help fix some of our inventory problems. But still, it's just a bill and faces a tough road in Congress. However, regardless, as an investor, you still have the option to access the existing exemption scheme by moving into the property for the requisite 2 years before selling. If you found this video interesting, smash the like button. And if you want to check out my video explaining in detail how the 1031 exchange process works, then tap or click the screen, and I'll see you there.